Alrighty, good afternoon, everyone. My name is Patrick Hawe. I'm an associate member of T3 Trading Group, which is a registered SEC broker-dealer and member of FINRA SIPC. All trades placed by myself are placed through T3 Trading Group. You should carefully consider whether trading is suitable for you in light of your own financial condition. Please read this disclosure in full. Thank you. Position disclosure, no new positions for YouTube. I tried to swing a crypto name earlier this week when it looked like Bitcoin was possibly going to break out, and then that breakout failed, so I got rid of that. Nothing else new for positions there. So yeah, let's get an update on this market and what's going on. In terms of the market itself, we were talking about this afternoon in the room. It's kind of been a little bit of a slower week market wise. We had Powell speak on Monday afternoon, and that caused a little bit of volatility. And Powell, I think he might be speaking again this week, maybe not. I'm just actually randomly remembering that he might be. Let me just double check. But obviously, we got jobs numbers on Friday, which we'll certainly discuss in a second. No, it was just Monday, and then I think he spoke last week at one point as well. Yeah, so we had Powell speak Monday afternoon. That caused a little bit of volatility, so just like a recap of what's going on this week and then what to expect going forward. So Powell spoke Monday afternoon. Monday was it's been a little bit of a volatile week, but there hasn't been too much going on in terms of the market itself. The side, I guess, entertainment, quote unquote, if you want to call it that, has been the China squeeze, the China momentum, the China FOMO. You could call it any of those. You could call it all of those. That's been pretty crazy to watch and trade this week. But in terms of the market itself, again, been fairly slower. Monday was super slow heading into Powell speaking in the afternoon. Powell spoke. He didn't really give anything new as far as I was concerned. Kind of just a bit back and forth, wishy-washy with, we're looking for more data to see how aggressively we cut or don't cut. If you had to get a takeaway from what he said, it seems like the takeaway was we're looking at a 25 cut in November and a 25 cut in December. Markets have been a little bit back and forth with whether we're getting two 25s or maybe we get one more 50, and then whether that 50 comes in November or December is obviously going to depend on the data that comes out. But once he was done talking, we snapped right back up and then closed really well on Monday. Monday was the last trading day of September. So it was the end of the month as well as the end of the quarter. So you often get outsized either MOC imbalances or just flows in general. I just minimized something and saw Josh's GIF for the first time. So I'm going to unminimize what I just minimized so I don't have to look at that. Anyway, so you often get outsized flows, whether it's on close imbalances or just certain funds, mutual funds, pension funds, shifting money around when they some of them only do it on the close, some of them do it only weekly, only monthly, even only quarterly for like some of the really big passive funds. So we ended up closing Monday pretty well after some volatility from Powell spoke. Then we came into Tuesday saying, okay, now it's the first day of October. That was a really solid close yesterday, but was it a, quote unquote fake close, meaning it wasn't necessarily, kind of like forced buying, not necessarily a real commitment of, oh, we're definitely going higher this week, just more buyers and sellers, again, based on that end of month and end of quarter. So we were a little skeptical coming into yesterday's open. We sold that off and negated that yesterday, and then ended up closing not too well yesterday. So that's fast forwarding to today now, where again Monday had a little bit of action. Yesterday was volatile, but it was we just kind of negated that end of quarter close, and then just spent the rest of the day chopping. But we rolled over a little bit into the close yesterday, and that was with the VIX actually having a seemingly strong bid into the close as well. So we were looking for a bit of a gap down this morning. Whether or not we were actually even going to get that gap down or how big that was going to be, obviously we had to wait and see that. And we did get the gap down this morning, which led us to a potentially slightly looking dangerous chart where we had this. I know on the futures it was like 57.30 ish, I want to say. For SPY, looks like it was about, call it 566 or so, around there. But basically, yesterday's low, and then we gapped down this morning coming into the open. We were a little bit off pre-market lows. We were still gapping down, but we were off lows. Both of those lows were roughly at that same level. I always remember the futures levels just because I write the note every morning. I want to say it was like 57.35. And that was the level where bears, if they really want to, like, if Monday was a fake close, yesterday was real flow coming back in, and that flow being dominated by sellers, was going to set the tone for the week and maybe even the month, which a lot of us are skeptical about. One, the month of October in general, and two, an October going into a presidential election, you usually just aren't super strong and bullish the whole month. So if yesterday's flow was a little bit more real, potentially the bears are ready to press us down, especially after that kind of fake Monday close that we got. And this morning, it looked like they were going to try to press that, but they negated it pretty quickly. We opened with that gap down. We flushed out this morning. We flushed out yesterday's low in that morning flush. 3 bars straight down in a row. And then fourth bar, a solid bounce back up, which reclaimed the low from yesterday. So that low, which again, it was yesterday's low as well as the pre-market low today, was a momentum level for bears to press through, which they tried to press through and did press through, but then pretty quickly lost it. And, we talk about trying to make a complicated thing such as trading simple as we can. And I always talk about levels, and, if you're above the level, good. If you're not above the level, not good. Don't be in it. Same thing on the downside with shorts. We lost that level. Shorts can try to press. That level was reclaimed. So you should be kind of getting out of the way and not fighting the whole up move and everything like that. And flushed out yesterday's low, reclaimed that pretty fast, and then spent the rest of the day really just chopping around. We couldn't really press up through 570. I remember being stuck at this 570 for felt like a long time, over an hour or so. A little bit of a rollover off that, but really just a quiet afternoon overall. With an okay close, it's not the best close the Bulls could have had, but the fact that we lost yesterday's low and then quickly reclaimed it this morning, I do think is a good sign for the Bulls up until Friday anyway. So as we all know, the market is a forward-looking mechanism, right? And it's always this game that the market's playing and us as traders trading the market are playing, where we're trying to figure out basically what's going to happen. Like, we're not trading, we just had a 50 basis point rate cut, but we're not trading based on that just happening. We're now trading based on, all right, now what's going to happen in November and December, right? So it's always these cycles of either we're looking for what the Fed's going to do, or if we're in between Fed meetings, we're looking for what is going to happen with the data points in between those meetings, and then based on those data points, what's the Fed going to do, right? It's kind of this cycle that we're just kind of in and out of for a while now, but that's just how it goes, right? So Friday, we have our jobs number. Next week, we have inflation numbers. As we talked about a lot when Derek was gone, and I think we all know it already, but the Fed's looking a lot more at jobs and employment more than they are inflation at this point. They still are not declaring, victory on inflation or whatever. They never declared inflation as transitory either. So I don't know if they're ever going to declare victory, just as they never declared transitory. But yeah, so we have inflation numbers next week, but this Friday is probably the bigger number of the two at this point. The jobs numbers seem to be more anticipated, I guess you could say, than the CPI and PPI numbers. So next week we have CPI Thursday, PPI Friday, but this Friday is the September jobs number. So usually, and the point of that cycle rant I was just going off about, we tend to hold in front of the big numbers, right? So this morning was a chance after yesterday's close, which followed Monday's strong but false close. This morning was a chance for the bears to try to press us lower, and they failed that within 5 to 10 minutes. And now with this close, it looks like the bulls are looking good for holding us in. But what are they? It's hard to say, okay, now we have like a real daily pivot, so we're just going to go right back up to all-time highs. That's not necessarily true in front of our next big event, which is the number on Friday, the jobs number. And then depending how that goes, that's going to influence basically, right now I think we're priced 25.25 with a slight lean on maybe 50 in November. So after Friday, those odds will probably either not change or change a little bit, but I'm sure they'll move with a bit of volatility. It would be interesting. I think the only real kind of crazy, because I don't think anyone's expecting things to fall apart too heavy. I guess we'll see what happens at the election. But the real interesting maybe tailwind would be if the economy and jobs and everything is doing so well that we start to price in only 125 cut for the rest of the year instead of at least 2, if not maybe 115, 125. That could be interesting for sure, but the data will tell us that. So yeah, nothing really. We have like weekly unemployment claims tomorrow. I don't think there's anything else too big tomorrow in front of Friday. Let me just double check that. What's today? The 2nd. Tomorrow's the 3rd. This ISM PMI tomorrow morning. ISM services PMI. So maybe that moves us a little, but Friday jobs numbers is definitely the big one that everyone's looking at. And so that's where we're at. Today's low is definitely important. It would be surprising. I think after this morning when we flushed and then reclaimed, it would be really surprising to see us lose today's low tomorrow in front of that Friday jobs number. If people were scared of Friday jobs numbers, if they were selling front running to be done or something like that, we shouldn't really have reclaimed and closed the way we closed today, I think. So we probably hold in and don't break today's low tomorrow. But again, does that mean that we're going to all-time highs tomorrow in front of the number? Probably not. So I wouldn't be surprised with either like an inside day or a doji type of day tomorrow in front of Friday, and then we'll see how those jobs look on Friday. And if too many people are still working, as we like to say, probably sticking with that 25 plan. Maybe even the odds of like a December cut start to dwindle a bit. And if things really are starting to slow down, then the odds of a 50 cut in November or maybe 25, because I've seen both where I don't know how they're determining it, but like a 25 cut in November and a 50 cut in December. But either way, those odds will probably increase a bit too. So that's where we're at and what to expect. Today was a nice hold for the bulls, but not everything, but for the next week or so, pretty much up until next Thursday, the jobs number on Friday is going to set the tone. And then next Thursday is CPI. There is FOMC meeting minutes next Wednesday, but as we all know or should know, there's no rate decision or press conference in the month of October. The next Fed rate decision's in November. So those meeting minutes, I don't know. Sometimes those move us a little bit intraday, but usually they don't matter too much. So I think that's everything to really talk about. And then just, as a side note, obviously these China names have been going crazy. Derek did a great job this morning having conviction to try to short them. Can't say I blame him based on the extension. We saw a crazy extension in them last week, and then they pretty much all had a bit of a pause 2 days ago, which was today's Wednesday, so that was Monday they paused. But then yesterday they pivoted right back up, and then today had a huge gap up again. So they basically got extreme extended, paused for like 2 days, and then as of this morning we're fairly extremely extended again. Some of them paused, some of them not so much. The FX, I mean, Baba, JD, these names all had decent pull-ins this morning, and a lot of us caught some of that. And then I think most of us either caught what we wanted to, or maybe got risk reward stopped out on the rest. I mean, look at this FXI close here. After yesterday, big gap up. This has a lower tail on this daily chart, which indicates that it went lower today, but recovered all the way. I would not be surprised to see these China names gap up tomorrow at all based on a lot of these closes. So crazy momentum, crazy FOMO, crazy stimulus to the moon activities going on over there. The China trade has certainly been crazy and interesting to watch. And that was most of our focus. I mean, that was definitely my focus this morning. What I trade Baba and Futu. But yeah, most of us were focused on that this morning as opposed to the market. Partially, again, because we're waiting for this number on Friday. So market shouldn't really do anything too crazy, especially after that reclaim. You know, off the open, we were looking a little scary for a second there, but within the first half hour to hour after reclaiming that low and pretty much V-bottoming intraday in the SPY, it was pretty clear that we were going to hold in, just maybe not press higher. And yeah, I think that's all I have to talk about. Trying to think real quick. Yeah, I think that's it really. Market holding in okay. We're all pretty skeptical of this month of October, and you know, not necessarily looking for a pullback, but it'd be surprising and almost it'd be like weird if we don't pull back at all in October and we're strong into the election, because usually we're weak into the election and strong after. So if we're strong into the election, does that mean we're weak after, or do we go from strong to stronger? I don't know. We'll see. But October literally just started yesterday. We got a whole month ahead of us, so you never know. But yeah, I think that's all I have to talk about. So happy to answer any questions, comments, concerns, complaints, all that stuff. Let me pull up the YouTube real quick. Give me a second here. Sorry, my stuff's a little slow right now. It's always slow when I'm streaming all this stuff, as well as running everything else I'm running. Alright, I think I got the YouTube up. What's up, Surreal? I see you. Let me go back to the VTF. Thought I saw a question or two. So first thing, not a question from Dennis, but a bunch of people have been talking about this MU. Decent earnings report for sure. Big pull-in. Every day this has had momentum down. Today's the first day it didn't have momentum down. Inside day. MU, I think, is worth watching for long somehow tomorrow, whether it holds today's low and goes back over 100 to 101, whether it's below today's low and then reclaims today's low, or whether it gaps up and goes through today's high. But MU, that downside trajectory slowing down, I think is worth noting. So I think you can look at that tomorrow. Levi earnings. I haven't worn jeans in a long time. Maybe that's why it's down. Just kidding. Hey Pat, what's up Rex? Took a long in Bristol Myers yesterday for a 1-2-3 play through the 930 high. BMY announced X div for 10-4. Stock will be down. Well, okay, yes, that's a good question. So technically, yes, when a stock pays its dividend out, in this case, Bristol Myers paying a 60-cent dividend, Bristol Myers stock will be down that dividend amount the next day. In reality, that's not really how it works, just because of markets and gaps and everything like that. I've definitely seen SPY gap up on a ex dividend day or whatever. So technically, you are correct with that. So you went long yesterday. You're saying for 1, 2, 3 play, which is nice. Increase my stop or keep my original stop. Well, I think, correct me if I'm wrong, but your question should be worded, should you decrease your stop instead of increase it? Because if the stock gaps down 60 cents, but you're getting paid 60 cents, yeah. I personally don't think you should decrease it. I could definitely see the argument for decreasing it, but again, I mean, in reality, like that is very true what you said about dividend payouts, but in reality, that's not always really the case. So I think you should keep your original stop, and just that dividend that you're getting paid is extra profit in your pocket. And if it stops you out, I mean, you get paid that dividend. If it doesn't stop you out, that's good. But your stop should be, especially if you're swinging, it should be based on like a real daily level that's important. And I don't think the dividend payout changes that level too much, because usually those levels are based on they got some real time behind them. So yeah, I don't know. Overall, no. What I do is not to change my stop when I'm in something that pays a dividend. Like I was in TLT for a while. I could see the argument for decreasing it, but personally, I don't think you should. But to each their own, I guess. But yeah, that's my 2 cents on that. Might as well keep the stop. Ideally, if things work out for you, you don't get shaken out. But keep that cash in your pocket. Yeah. From Jerry, is energy an area of focus with potential increasing volatility with economic slowdown globally? It's an area of focus because of the things you just said. Is it something I want to trade or I'm going to trade? Honestly, probably not. Energy's really hard. Gold's really, I would say that gold and energy are very hard. I really usually, not that I've never traded energy before, I had a swing in Oxy for a while, but I really only like them when things are really extreme, like to the downside or the upside, oil. And it depends on the chart too. I'm really not a big fan of trading energy though. I mean, what you just said, Mideast trouble and economic slowdown globally are two opposite factors. Mideast trouble will make oil go up, and a global economic slowdown makes oil go down because demand is less. Those are two kind of opposing forces, so that already makes me not want to trade it. And I mean, looking at these charts, I don't know, oil has been really weak. Strong day yesterday, not the best day today. What does XLE look like? I don't know. This price action's pretty not great. If XLE gets over 92, you could try to be long it for a breakout. I don't hate that. That 92 level is definitely a real level. Bumped into it a few times here, back here. It was support back here. So yeah, if XLE gets over 92 and is really trending up and oil's trending up, then there's a decent reason for that. And hopefully it's not because the Mideast tensions are rising, but that might be the case if that is happening. And then otherwise, I don't know. I don't know. I'd want you to ask someone, a better energy expert, because I've always found energy pretty hard. So it's definitely an area to focus on, and potentially like day trade stuff if the theme of the day is Mideast tensions, or the theme of the day is the economy slowing. But for swings, I think it's pretty hard, and you just got so many potential like tailwinds or just random events that could happen, that you could have oil close great, and then the Mideast finds some peace or something, and oil gaps down 3%. So it's worth paying attention to, but trading it is harder, I think. Nvidia moving. See you guys talking about moving up. Wow, Nvidia moving up. What a surprise. 2020 September was outside month. November outside inside. December up. Pat, could you provide some insights into how, obviously, 2020, just off your comment, Rich, too, that was obviously a little different after the pandemic. Maybe check out 2016. Could I provide some insight on how you scaled into your lot share size on your trading journey? I feel like I'm at a point where I'm confident my strategy was struggling with sizing, I think. For me, it's all about dollar risk and not so much about sizing, which I assume you're doing that. But and I always say this. I mean, you trading, you really either you got to be right all the time, or you got to have better reward than risk ratios. So your question of scaling into my lots and share size, it doesn't really matter. What matters is the dollar risk. So like if you're saying you feel like you're at a point where you're confident, you're struggling with sizing, fear, nervous, if you know your risk and you're comfortable with that risk, there really shouldn't be any fear or nerves. And trust me, I get when you're actually trading. I mean, everyone has nerves trading still. If you're shorting those China names this morning, yeah, I was a little nerve-wracking for sure. But if you have a game plan and you have a measured dollar amount that you're risking, whether it's on an idea and you're willing to try it a couple times, or whether it's a total amount, or whether it's per trade or whatever, you should be comfortable with that. If you're not, then you're risking too much money for however much money you have, and you just need to risk less. You need to get it to a point where you're like not really nervous. Even if it's $20 a trade or $50 a trade or whatever, if risking $200 a trade is too much for you and you get too nervous, then don't risk that much, because you're not going to trade the game plan right. But if you're risking whatever, say you're risking $20 just to keep things simple, you're risking 20 a trade. Hopefully when you lose, you're losing 20, and when you win, you're making 30, 40, 60, maybe even 100 plus sometimes. AKA you're losing 1x and you're making, sometimes you're losing 1x a couple times, but then sometimes you're making 2, 3, 4, 5x. And in the long run, that math should work out for you. Yeah, I think that's my answer for that. So like I get what you're trying to ask, but I think you're not, I don't want to say you're thinking about it wrong, but that's the way I personally look at it, and that's how I would think about it if I were you. Because the sizing, that's like what matters. The sizing, especially when you're trading, prop or whatever, you can scale up. You got to get a system where it's not random. There's a real game plan. There's a real risk reward ratio. Unless you're like 95% sure this is going to work, then your risk reward ratio should probably be bigger than 1-to-1 at least. hopefully you can make 1 to 3, but there's a small chance that you can make 1 to 10 plus, right? And from there, you can, unless you're trading like weird low float stuff, you can pretty much infinitely scale it up. If you want to short 100 shares of BABA and risk 50 cents and risk $50, I mean, you can short 100 shares, you can short 1,000 shares, you can short 10,000 shares. If you want to start doing 100K blocks, things become a bit different. But, if you're doing that, then you're probably not asking me questions anymore. So, yeah, I hope that makes sense, Taff. Let me know if you have any follow-ups on that, but I think that's the way you want to look at it. Because, again, if you're, you shouldn't be getting nervous. No one should be getting nervous. It's annoying to lose money, but you'll find once you start to fix your mistakes over time. I mean, this is what I have found anyway. Once you start to fix your mistakes over time and you get better and better, that's like a main thing. If you're too nervous, you're probably risking too much. Even if you can make a lot, you gotta be able to survive to trade the next day. If you blow up one day and you can't trade the next day, and the next day there's an A+ setup for you, well, you can't trade it. So yeah, if you're too nervous, you're probably risking too much. So make sure you know the dollar amount, and from there, risk 10 cents to make 20, 30, 40, 50 cents a dollar, risk 50 cents to make $2, $3, $4, risk $2 to make $5 to $10, stuff like that. It becomes scalable. So I hope that helps. I just seen your comment on China surreal. I don't know if you asked that before I talked about China, but it definitely can keep squeezing more for sure. And honestly, based on today's close, I wouldn't be surprised if those China names gap up. Are they going to go straight up forever? Obviously not, but can it last a couple more days? Yeah. Can it last a couple more weeks? Honestly, probably yeah. All right, looks like I got through everything. Any other questions? Otherwise, happy to call it. I got other stuff I'm watching after hours, as you guys know, so technically not supposed to do these for too long. Just making sure I didn't miss anything else that I wanted to talk about. I don't think I did. No, looks like I'm good. All right, so yeah, I mean, crazy day because we were shorting the China names this morning, but other than that, a fairly tame day for the market. Market almost had a bigger flush breakdown, but very quickly reclaimed yesterday's low. Closed okay. Tomorrow might be a little choppier and more dull ahead of those Friday jobs numbers, and then we get the jobs number Friday morning, and that should make a at least better first half of the day for Friday. And yeah, China names closed pretty well, so maybe those China names gap up again, and we look at shorting them again tomorrow morning. So yeah, have a good night, everyone, and we'll see you all tomorrow morning. Take care.